Hi guys, welcome back. Today we're going to be looking at Taiwan Semiconductor Manufacturing Company, or what I'll be abbreviating it as TSMC. It is a semiconductor manufacturing company that has operated for quite a long time. It was established in 1987. Its stock market, its price over the last 5 years hasn't been too volatile. It was relatively stable throughout 2020, had a big jump in 2021, remained pretty stable between 2021 and 2022. But since its high of $140, it has come down close to 35%, currently trading at $90.85. Its PE ratio of just 21 is quite cheap for its industry, and it is one of the biggest players with a market cap of $457 billion. And a dividend yield of 2% is just a bonus on top. So given its decrease in stock price by about 35% over the last couple of months, I do think that this brings it to an interesting price, given it was quite overvalued throughout 2021 and throughout 2020 as well. So maybe this can be a time to review this company and see what does it have going for it, what are some risk things, and whether it is potentially a buy. So looking at Taiwan Semiconductor. So with secular growth rates in various sectors, supply chain disruptions caused by the COVID-19 pandemic, and a burst of demand because of changing consumer habits, there was a perfect storm to cause shortage in the semiconductor market over the past few years. The industry sold a record 1.15 trillion units in 2021, driving a total revenue of $556 billion. This makes the semiconductor market one of the largest and fastest growing worldwide. But how can investors profit from this secular tailwind? So Taiwan Semiconductor Manufacturing, or TSM as it's listed on NASDAQ, is the simplest way to invest in the global semiconductor shortage, setting shareholders up for solid returns in the long haul. Here's why. So founded a few decades ago with government funding from Taiwan, TSMC brought a unique approach to its semiconductor manufacturing. Instead of designing and building its chips like its competitor Intel, it lets other companies design chips and focuses solely on the manufacturing process. And this process is called semiconductor foundry. And because of this, it doesn't really have to reinvest into research and development when it comes to developing new chip designs. And because of that, it has a very high net profit margin for its industry. So throughout the years, this focus on manufacturing excellence has allowed TSMC to leap ahead of competition technologically, which is why it's won long-term contracts from industry giants like Apple, Nvidia, and AMD as well. For example, when Apple started designing the chips for its own computing device, it turned to TSMC because of its consistency and best-in-class abilities. It also helped that Apple could customize its chips specifically for its products, which is something you can't do for an off-the-shelf item like if you would buy from Intel. So TSMC's competitive advantage in the semiconductor manufacturing has led to phenomenal growth over the past few decades. Since 1994, the company's compound annual growth rate for both revenue and earnings is above 17%, which is exceptional. And over the last 12 months, it's generated close to $60 billion in revenue and $23.5 billion in operating income, which is an operating margin of 42%, which is the best in class for a manufacturing business. Once again, tying back into the fact is that unlike Intel, they don't actually have to reinvest a lot into research and development of designing new chips. But I don't think the growth gravy train is set to stop anytime soon. Analysts expect industry revenues to grow over $1 trillion by 2030, which is almost double 2021 sales. As a dominant manufacturer in the industry, which plans to sell between $40 billion and $44 billion in capital expenditures just this year, TSMC is setting itself up to capture a good slice of this revenue. Accordingly, management has guided revenue to grow at compound annual growth rate of between 15 and 20% per year through to 2026, which is quite good, especially for the size of this company, while maintaining a 53% gross margin, which is once again exceptional. If TSMC hits a low end of this guidance and grows at about 15% compound annual growth rate from 2021 through 2026, it will still be doing approximately $115 billion in revenue by then, which is still very solid for this company. Next thing we're going to be looking at is just their Q1 2022 presentation, with this quarter ending in March and this presentation coming out early April. So you can see their net revenue in US dollar billions is up 36% to $17.5 billion, up from $13 billion in 2021. Their gross margin is up 3.2 points. Their operating margin is up 4.1 points. Their net profit margin is up 2.7 points to 43%, which is once again exceptional. And the return on equity is up 6.7 points to 36.2%, which is once again extremely good return on equity. Looking at their revenue, but let's just scroll up here. Looking at their revenue by technology, we can see that their 7 nanometer chip and 5 has been continuously increasing in sales and revenue over the past couple of years. And you can see their 5 nanometer chip, which they released in Q3 of 2020, also taking a bigger chunk of this pie over time, showing how well it's been received by the market. Given its 14 nanometer, 28, 40, 65, 90, and other chips are still slowly kind of sitting there. Majority of the growth has been coming from their 7 and 5 nanometer chips, which is quite cool and quite good for this company that has invested quite a lot of money into the 5 nanometer chips developing. It's good to see this paying off. Based on recent trends, it looks like it's going to go good into the future as well. One more thing I wanted to look at is their 2022 guidance. So this is the management guidance for the Q2 of 2022. Their revenue is expected to be between 17.6 billion and 18.2 billion, which is quite solid. And based on that, their gross profit margin is expected to be between 56 and 58%, which is up between 3 and 5 percentage points up from Q1 of 2022. The operating profit margin is expected between 45 and 47% there as well. So that's quite solid for the company. So the investment thesis of why TSMC is a good company. So TSMC proved that global supply chains has yet to impact its current earnings while reporting a record-breaking financial Q1 of 2022 earnings and expanding gross margins. Investors should be encouraged that the company will retain its profitability moving forward, given that it's raising prices from 2023 onwards. Furthermore, through its aggressive capex and research and development investments, we are also confident that TSMC will retain its massive market share in the semiconductor foundry industry through to the next decade, thanks to its long-term expertise, mastery of the industry's complicated supply chains, and expanding global production capabilities. Therefore, tech investors would be wise to add some exposure to TSMC during the dip, which is likely to remain among the world's most influential companies for a long time to come. So TSMC showed the world why they are king in the foundry industry. So we can see TSMC's revenue, net income, and gross margin. So their revenue in the blue, we can see, was up from about 10 billion in 2020 up to close to 17 billion in 2022. Amazing growth there. Their net income was up from about 3 to 4 billion up to about 7 billion. So that's almost doubled over the past 2 years. And their gross margin has remained relatively stable, kind of fluctuating between the 50 and 55% range, which is very, very good for a company of this size. In the past 5 years, TSMC has reported tremendous revenue growth at a compound annual growth rate of close to 14.5%, while its net income grew faster at 16%. In addition, the company has managed to hold on to its gross margin steady at over 50% throughout the years. In the financial Q1 of 2022 alone, TSMC reported record-breaking revenues of 17 billion, representing a remarkable increase of 8.4% quarter-over-quarter and 34.6% year-over-year. Furthermore, its net income also grew by $7 grew to $7.08 billion by 18% quarter-over-quarter and 44% year-over-year, given an expanding gross margin of 55.6% in the financial one of 2022. Looking at their cash equivalents, free cash flow, and free cash flow margin. So you can see that cash equivalents have increased significantly, which is a very, very good sign for this company. Its free cash flow has fluctuated slightly more, but given it's in the positive right now, it's a good sign for the company. Their free cash flow margins, once again, fluctuating like the free cash flow, but generally it shows that it has been trending in the right direction. So TSMC is also a highly profitable free cash flow company with an impressive $14 billion in free cash flow and 23.5% of free cash flow margins in the last 12 months. Furthermore, the company is growing a war chest of cash equivalent of 40 billion by financial Q1 of 2022. As a result, TSMC is highly equipped for its aggressive expansion production capabilities in Taiwan, Japan, and the US, given in the increasingly tense geographical climate, given majority of its productions is done in Taiwan, which is obviously under threat, or could potentially be under threat with an aggressive Chinese military in the South China Sea. Now, given their sizable war chest, they will be able to expand, and they are looking to expand over the next 5 to 10 years overseas, diversifying the company and making it more and less specialized and more diversified in the long run. So TSMC's net property, plant, equipment, and capital expenditure. We can see that capital expenditure has increased slightly, but it has been outpaced by its net property, plant, and equipment, showing good use of money in that scenario as well. And generally shows that their net property and plant equipment is trending in the right direction. And once again, as the company grows larger, obviously its cap expenditure will increase. It's evident from the chart that TSMC has been expanding its production capabilities over the last 3 years, with a total of almost $39.5 billion in investment in its net property, plant, and equipment since the financial year of 2018. In addition, the company is also growing its capital expenditures to increase its global presence in Japan for the 22 and 28 nanometer production technology, and the US for the 5 nanometer production technology as well. We may potentially see TSMC increase its production capabilities to add 2 nanometer production in the US plant as well, as its competitors Samsung and Intel sought to conquer the latest technology by 2025. Get their research and development to revenue percentage, we can see that R&D expense has come up significantly, which is a good sign for this company as it's been reinvesting more. But more importantly, as it's gone up, we've seen their research and development as a percentage to revenue slow down, showing that their revenue is growing faster than the research and development rate, which means that it's not a very capital intensive business and it's using its investments and research wisely to go into profitable sectors and not really wasting its money just doing research into anything it can find its hands on. It's also evident that TSMC is aggressively investing in its growth given its continuous R&D expenses over the last year. As its revenue grew in strength, the company pumped more and more in order to ensure its competitiveness in the product innovation through 3 nanometer, 2 nanometer, and 1.8 nanometer production technologies. Given that R&D expenses still constitute approximately 7% of its revenue, we expect TSMC to retain its leadership in the semiconductor foundry industry, with a lion's market share of over 50% since the second in line Samsung only reports 18.3% by financial quarter 4 of 2021. Through Intel plan to enter the foundry industry with a 1.8 nanometer and or 2 nanometer technology based on ASML's latest EUV machine, TwinScan EXE 5000 and EXE 5200. By 2025, we are confident that TSMC will retain its leading status moving forward. As a new player with entirely new technology, Intel could face and would face multiple roadblocks in achieving the same success and production scale as Taiwan Semiconductor. By contrast, TSMC will utilize its long-term expertise, skill, labor, and excellent command of the semiconductor complicated supply chain to excel as it pushes out the 3 nanometer technology by quarter 2 of 2022 and 2 nanometer by 2025. As a result, Intel would most likely be a few steps too late to pose a significant threat to Taiwan Semiconductor. So looking at their projected revenue and net income, we can see their revenue forecast mean consensus has been significantly growing to from about 70 billion in 2022 all the way to 95 billion in 2024, which is exceptional growth, while their net income is slightly slower, probably expected due to their research and development and trying to expand overseas, but still that is growing at a good rate. We're looking at about $8 billion more over the next 2 years. Over the next 2 years, TSMC is expected to report revenue and net income growth of between 16% and 13% respectively. Obviously 16% for its revenue, 13% for its net income. Consensus estimates that the company will report revenues about 70 billion and a net income of 28 billion, representing year-over-year growth of 22% and 34% respectively. In addition, TSMC has guided financial quarter 2022 revenues in the range of between 17.6 and 18.2 billion, which we did see before, representing a tremendous increase of 6.1% quarter over quarter and 35% year over year. Furthermore, the company expects to further expand its gross margins to 58% for the next quarter, and the global semiconductor market is also expected to grow from 552 billion in 2021 to 893 billion in 2029 at a compound annual growth rate of 9.2%, aided by the push of 5G technology, edge computing, autonomous EVs, amongst others. So we're looking at the market growing about 10% compound annual growth rate. By over the next couple of years, we're expecting TSMC to grow about 16%. So they are looking to outpace and gain market share from its competitors. Though there may be concerns about TSMC's future due to the ongoing political tensions between China and the US, we are not that concerned given multiple sanctions on Russia for the Ukraine invasion, setting an example should China try to do the same. And President Xi's goal of 5.5% GDP growth for China in 2022 and his impending third-term election in November of 2022. As a result, it's evident that TSMC will continue its stellar growth moving forward, given its highly relevant foundry business and increasingly digitalized and cloud-connected world. So the last thing we're going to be looking at before a little bit of technical analysis at the end is simply their balance sheet. So we can see that earnings per share has been growing significantly from 30 Taiwanese dollars in 2012 up to 126 Taiwanese dollars in 2022. Now, just to convert that to the US, we're looking at an earnings per share of about $4.25, which gives it close to its PE ratio of about 21. So looking there, we can see that its dividends have been growing as well, and its payout ratio hasn't been necessarily too high, so that's obviously quite safe. Its book value per share is just $15 in USD, but once again, this is a growth company specialized in making revenue and profits rather than owning assets. Its operating cash flow has been going up, cap spending been going up, reinvesting more into the company, and free cash flow, as we've been mentioning before, it's been building up its war chest to expand overseas as well. Looking at its profitability, we can see that its return on equity is exceptionally high of 30%, and even better, its net margin, which is the amount of money it actually keeps after its revenue, which is its profit margin essentially, of 38% of the trailing 12 months, which is once again a very good sign for the company. In terms of debt, the company has been quite conservative with its debt. It's just 0.28 debt to equity ratio, which means should the company come into tough times, it's unexpected, but should it come into tough times, it can easily pay itself way out, given quite a low debt to equity. So overall, the balance sheet seems quite healthy. Management projects good growth into the future as well. Looking at this technical analysis, we can see that the stock has grew a lot in 2020. But one thing I want to point out is a repetitive theme of kind of bouncing back from the 200-day simple moving average. So we had the first time in about 2018. The next one we had a dip in about 2019. Then obviously the infamous COVID announcement causing the stock market to crash in March or April of 2020. Since then, it had a stellar 2020. Rising to about 140 in 2020 at the beginning of 2021. Here it stabilized at the 50-day simple moving average rather than at the 200. But once again, coming down, we can see it's based out at about 200-day simple moving average again. Now, highlighting a trend we've seen every time it kind of rebounds, it kind of goes up, and then it's coming down again. And we did see it come exceptionally close to the 200-day simple moving average, about $85. Does look like a good time to load onto this company, as it is expected to spring up into the future once global tensions decrease and the semiconductor shortage starts to abate. We can see TSMC gain more market share in its industry, become more and more competitive, and based on management guidance can even outperform the growth of the market as a whole. So overall, I do recommend TSMC as a buy. It does have quite good financials. It has a good growth story, and it has a very, very solid presence within the market. But if you do choose to invest, make sure to do your own due diligence, and I'll see you in the next video. Bye.